The resistance level on the SPY is still clearly working out. The NASDAQ made new all-time highs, and you guessed it, the 30-year yield popped off today. So in today's video, we're going to go over the overall indices. We're going to go over the crypto market, as well as the bonds and the dollar. So without further ado, let's get right into it. But first, if you guys like the content, make sure to like the video, subscribe to the channel, comment, share it, do all that good stuff. All right, thank you. So we were looking at this level of support on the SPY, which then turned into resistance recently. All right. In the last video, I showed that the SPY had multiple overextended signals. One of them was that we were trading outside of the upper level of the Bollinger Band. We were overbought on the RSI. We were overbought on the MACD, and the other indices, for example, crude oil, also looked extremely overbought. So with all of those things in mind, and being at extremely strong resistance, I said that we might look to consolidate, and that looks like what's going on right now. We fell all the way back down to 430. 430 held as amazing support. We were 1 cent off of that support, and then we popped right back up. So now we need to see if we can cool off a bit on the RSI, on the SPY. We need to see if we can cool off a bit on the MACD as well, and see if we can remain above these very important trendline resistances that we have on the SPY in between 428 to 430. If we can hold those levels, then that will remain a bullish move to the upside. So as you can see for tomorrow, this blue trend line is a very important level of support. We were monitoring this level of resistance as well. We noticed that we couldn't cross above and close above this level of resistance until recently. We closed and consolidated for 3 days above this level, which then signaled a huge breakout to the upside. All right. So now we need to see if the SPY can remain above this level of resistance. So that level for tomorrow for the support is going to be approximately 428.20. And if we can remain above that level, that I think would give enough potential for the SPY to cool off just a bit. That would give room for the RSI to cool off, the MACD to cool off just a bit as well, and then potentially more room to the upside. So that's just something that we have to monitor. We just have to see how we respond within these two levels here on the SPY. All right. Next, we're going to look at the IWM. So clearly today, the Russell 2000 was the clear loser. All right. We broke down below 228, and we bounced perfectly off of the 38.2% fib level at 224.09. Okay, so this is currently acting as a very, very strong level of support. 224 is support, 228 is resistance. So currently on the IWM, we're trading right in between it. What happened now is that we are oversold on the MACD. The RSI fell dramatically as well. And I was saying that there was a huge potential to fall, because now if you're looking at the MACD now, like not including today, the MACD right here, you can see this blue line was still overbought, and it still needed to cross below the yellow MACD line. Okay, so that signaled a very, very potential strong chance of a sell-off, and that's exactly what happened today. But it's a good sign that we held 224 as support. If 224 breaks, then then the 50% fib level at 220.87 is going to be acting as strong support. All right. So now we just need to monitor these levels. If the IWM can consolidate here just a bit, it would give more potential time for the MACD to cool off, more potential time for the RSI to cool off, and then potentially move to the upside. But the main reason why the IWM fell is the same thing with the bonds that I've been talking about before. All right. So overall, what I've been saying, and the macroeconomic, educational lesson that I was talking about yesterday in the video, is still prevalent in today. All right. So now we're going to talk a bit more about that. So we're going to talk about the NASDAQ and the relationship with the bonds and the dollar, and how that correlates to the IWM and the NASDAQ. All right. All right, clearly the NASDAQ is the overall winner of the indices. It is completely making new all-time highs constantly. We did retest this level of support just a bit. We consolidated a little bit and we skyrocketed on upward into new all-time highs. We hit 360.19. We closed at 360.19 and we hit a high of 360.48 on the NASDAQ. You can still see that it's extremely overbought on the RSI. And the MACD has yet to really start climbing upward in a very, very bullish way. It barely moved. As the NASDAQ was still continuing to rally into new all-time highs. So this shows extreme strength. So that's why I've been saying the NASDAQ is showing extreme strength all throughout this period. So why did this happen? Why is the NASDAQ continuing to show strength? Because the 30-year yield broke out today and is now trading outside of the upper level of the Bollinger Band. All right. So when the 30-year yield and the dollar are both bullish, that means that the NASDAQ is going to lead and be extremely bullish. But when the 30-year yield is bearish, when the 10-year yield is bullish, and when the dollar is bullish, then the IWM will lead. All right. So just rewatch that portion of the video and you'll understand what's going on the macroeconomic standpoint of the market. You can literally every morning look at what's going on with the 30-year yield, look at what's going on with the 10-year yield, and look at what's going on with the dollar. And that will give you a very clear understanding of which indices are going to be the winners and which indices are going to be the losers. Watch yesterday's video for my explanation on further dynamics of why the NASDAQ gets affected positively by the 30-year yield and why the IWM gets affected negatively by the 30-year yield. All right. So I hope that explains that. Let's do some analysis on the 30-year yield. So clearly it's getting a bit overextended. All right. We're outside of the upper level of the B band. The MACD crossed above in a bullish way. The RSI is getting close to being overbought. And we have just been parabolic and going very, very high. So obviously the next level of resistance is going to be this upper wick at 163.02. So we need to see if the 30-year can break above 163.02. If it can, then it can make its way all the way back up to 166. So that's something to keep in mind. Now let's look at the dollar. So the dollar looks extremely strong. Okay. It's holding this level of support above 92.44 very, very well. It's been closing above it. It made, a bull flag. It's crossing above this level of, the upper level of the flag, and it's continuing on higher. And we're still oversold on the MACD, which is extremely, extremely ridiculously bullish. The MACD is still pointed downwards, yet the dollar is skyrocketing up in price, which is a very, very, very bullish sign. Okay. The 10-year yield, it's now outside of the lower level of the B band, which is an extension to the downside, which means that there is a potential return to the mean trade. The RSI is also close to being oversold, and the MACD is also extremely oversold as well. So those are three different potential signals that the 10-year yield can potentially bounce back up soon. Okay. We do see that it's sitting close to support around 135.4. So we're currently trading a bit below it. So we need to see if it can hold that. If it can't, then it can easily go back down to 131 and then potentially 130. Okay. So if the US 10-year yield is going down, then the NASDAQ is going to continue going up. But if the 10-year yield starts to roll and start bouncing, then the NASDAQ can potentially start, rolling as well. So we really need to watch. Before you ever even think of getting short on the NASDAQ, is you need a break of this trend line here. Okay, so tomorrow on the NASDAQ, this level of support is going to be potentially around 355.37, 355.40. All right. If we break below that level, then it is a good potential sign to go short the market. Otherwise, this is just showing extreme strength to the upside, and there's no reason to go short the NASDAQ currently until you get a signal. This can continue going on higher. This can rip everybody's face off and continue going on higher. It'll make all of the bears' minds go crazy. Oh my God, this never happens in the market. We're so overextended. Inflation, unemployment, this, that. But people have to understand that the stock market does not equate to the economy. Okay? The stock market is being funneled with hundreds of billions of dollars a month that is being printed basically by the federal government. Okay? So that's why the market is continuing to go on higher. We can become bearish when it's time to become bearish. But right now, there's no clear reason or a potential sell signal. All right? So until then, you follow the smart money. The smart money is investing in the NASDAQ, and it's trading on higher because of those other macroeconomic factors, the 30-year yield and the dollar's strength. All right? So with that being said, the crude oil made a huge downtick today, which is another reason why the SPY also fell, because crude oil failed at this level of resistance. We were talking about how it was trading outside of the upper level of the B band, how it would potentially show weakness in the in crude oil. We were getting very overextended. We were extremely overbought on the RSI. We've been parabolic this entire time. We've just been constantly going up. And the MACD, you know, it still shows potentially that it can continue going on higher, but this is really sort of like a 50-50. It shows a lot of strength to the upside, given that we are now at support. But if we continue falling, the MACD has not even really taken this big red candle into consideration. So we can potentially fall much lower, and then the MACD can turn lower than the yellow MACD line, which would, you know, signal potentially a sell-off to $70. And I wouldn't be surprised if that happens, because then we would create a bullish structure. So what we can do on, you know, crude oil here is we can make a Fibonacci retracement level, and we can see the potential levels of support. So if 73.34 doesn't hold on crude oil, then we can easily fall back down to 71. And then we can potentially fall back down to 69.27. So that's just what we're watching. If crude oil continues on higher, then it can help bring the SPY up as well. But because crude oil and the IWM both had red days, it caused the SPY to fall. So there's my analysis on the overall market. So now we're going to go over and talk about the crypto markets. As you can see, Bitcoin is still chopping within this range that we have here. All right, so this level of support on the log chart was a signal that signaled the capitulations to the downside. It broke 41,000 and it fell all the way down to 30,000 within a single day. All right, so this is the log chart line right here. When you exit out of the log chart and go to a normal chart, this level is now acting as very, very clear resistance. All right, so we're trading within these two large blue levels and this green level of support from back in November. So we just need to see how Bitcoin responds above these levels. But something that we need to take into consideration is the MACD on Bitcoin is now starting to cool off, right? This is exactly what we needed. We needed Bitcoin to consolidate a bit, allow for the MACD that was extremely overbought to cool off and potentially cross down below. So once it potentially crosses down below, right, that would signal that there is a lot of room to the upside for the MACD and momentum in general. So what we need on Bitcoin is in the next few days, it needs to stay above 32,500. If it can stay above 32,500 within the next like 1 or 2 days, that would be potentially very bullish for the MACD. I wouldn't even be upset if it only chops around 33 or 32,000 for the next 2 days, because that would be all of the, mathematically, that might be just enough for the MACD to cross down below. All right. Once that happens, if we now become oversold on the MACD at support, that would be a very good bullish setup for a potential pop up. And then we just need to see, what really happens on Bitcoin. Again, these levels of, these Fibonacci levels of support here on Bitcoin at 350, which is the 50% fib level, as well as the 61.8% fib level at 32,500, are both very, very important levels. It's basically just $1,000 difference, and we just really need to see how we respond around these levels. This green level for tomorrow doesn't break unless we cross above 36,400. All right, unless we can cross above that, we're still going to be trading within this range. And the two dates that we really need to take into consideration where these lines and trend lines intersect are July 21st and August 19th. So those are going to be two important times for Bitcoin, potentially, only based off of the intersection of these important levels of support and resistance. This is what algorithms are going to be looking for as well. There needs to be some sort of a movement that happens before these 2 days. But, I'm not sure exactly where that movement will occur. What we can see when we zoom out is that this is a bear flag on Bitcoin. That is a very, very bearish pattern. But, a few $100 billion can solve any bearish problem. So we just need to see how Bitcoin responds above this blue level and above, 32,500 essentially per Bitcoin. Now let's look at Ethereum. So Ethereum, it had a red day, but now it's starting to retest the 2316 level and the 2341 level. If Ethereum can cross above and close above 2341, that is going to be very, 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 very bullish and good news for Bitcoin. Okay, so we need to see if this is altcoin season. We need to see if we can cross above, consolidate a bit, and continue on higher on Ethereum. That would give all the potential strength for Bitcoin to continue on higher as well. And, then they would start moving back up in unison, and things would be great on crypto Twitter again. All right. So honestly, that's really it. As long as Bitcoin and Ethereum cannot cross above these levels of resistances, and as long as Bitcoin stays above these levels of support, that's really all we're looking at. The day-to-day trading, I don't really scalp Bitcoin. So from the larger lens, this is really what we're looking at. The correlation between the dollar and Bitcoin is currently not as strong. As you can see, the dollar had a huge move up today. But Bitcoin, it's still held in there. Okay, so it's not necessary that whenever the dollar goes up, Bitcoin's going to go down and vice versa. All right. So without further ado, that's the video. I hope you guys enjoyed it. And yeah, I'll see you guys tomorrow. Have a great day.